Hey traders, what's going on? Jamie Saettele here, midweek webinar about to begin. It is June 29th, 2016. Let me know if you guys can hear me.
The broadcast is now starting. All attendees are in listen-only mode.
Hey traders, what's going on? Jamie Saettele here. It is June 29th, 2016, SB Trade Desk midweek strategy webinar about to begin. Let me know if you guys can hear me before I get started. Okay, from Masanori. Okay, great. All right, so I'm going to start actually with this chart that you're looking at right here. This is the U.S. dollar. This is I've put out special reports over the last month or so on the ICE dollar index, right? You've seen that. This is actually the U.S. dollar index for the FXCM one. So this is the one with euro, pound, Aussie, and yen. So it will be obviously quite, some of the pound moves will be more reflected in this one. And, a lot of times, people with longer term charts, right? You look at like two equal legs, okay, in a market. So in this case, two equal legs, you do an extension, right? And you'd see that you get two equal legs at 12.041, and that's like kind of nothing, right? On longer term charts, it's important to look at percentage moves, right? Because they relate. You're comparing apples to apples at that point. So to do that, just find the percentage. So in this case, you can see that the leg higher from 2011 to 2013, okay, we'll just do it right here, is, what is that, 11,009 minus 93.22, okay, and then divide that by the starting point of 93.22, you get 18.1%, right? So to find where you would have an 18% rally from this low, secondary low, the midpoint of the rally was 10.354. So just add 1 to that. Oops. Add 1 to that. Okay, and then multiply that by 10.354. And you get 12, you can see here, 12,228. Okay, well, the high was 12,306. It's 8 points difference. Eileen, hi, what's going on? Happy to see you too. So, as you can see, you do have two equal legs in the U.S. dollar index, out in percentage terms. So, despite all this, I know I wasn't going to say it, the word Brexit, despite all of the Brexit, it's still quite possible that you have a topping process in the dollar, right? Now, each individual currency is going to do its own thing. This is DXY. Okay, so here you go. Leon, yeah, I haven't gotten to that part yet. The 58-week cycle, though. Okay, and this is just something I noticed. It's not like it, has to work. But yeah, 58-week cycle, each 58 starting from the beginning, these two lows are 58 weeks apart. Next 58 week is right here. The next 58 week would be this week right here, which is the week of in December of 2014. You did get, that was in the middle of a crazy uptrend. You did get a down week the next week. Okay, but no, not every 58 week You say it doesn't always work. I mean, it's just an observation, right? Nothing always works, right? Most of the time things don't work. But the next 58-week point was right here, okay? And 2 weeks later was the top. In other words, it'd be silly to just dismiss this because it wasn't a major turn here. So all I'm saying from that is that 58 weeks from there puts you all the way into February of 2017, which would be, again, maybe the next major turn, possibly. And then the midpoint of that cycle puts you into August. But the big thing I want to get across here is the fact that you've got 2 equal legs. Leon says, what would convince you to abandon your bearish dollar view? I mean, I guess if the euro broke out, I mean, that's the thing. It's not. I'm fine to trade on both sides of the dollar. I mean, just recently, we've been trading both sides of the dollar, right? The point here, Leon and everyone else, is that all this stuff is there, so it's relevant. The fact that you've had to post-Brexit, I know a lot of traders that got really bullish the dollar just now. Well, that hasn't worked out too well for them, okay? Because the euro's rallied 200 pips. So like they're like, oh my God, this is the beginning of the next big dollar rally, and then the Brexit's going to cause the dollar to go up again, and blah blah blah. So they're going to go chasing everything, right? That's just no way to trade. So look, in order for this to work, you need to find a resistance and all this. But let's look at this too, Leon and everyone else. This is dollar seasonality. We're entering one of the most bearish periods of the year for the dollar, actually. Okay. So just keep that in mind. Now, I'm more of an Aussie bull, right, than a straight up dollar bear, right? I think the euro can go to 106, as noted in these charts. Like here's the euro dollar chart, right? And my thinking here is that we've got go out to a 240-minute chart. Okay, we've continued to come back, by the way, and test a pretty good level, I'd say, in euro, 111.30 month open. At this point, though, guess what? We're looking right here. Okay, and go to a daily. It's annoying as hell. Okay. So right here, looking at basically wanting to be short into resistance, which is always a good idea. And the 618 of the drop for 1426 is 112.29. If you zoom in to that chart, go say 60 minutes, you'll find that you have 2 equal legs, a little higher than that at 112.50. Okay, so if we're heading to that level, then where might we find support? My guess is that it's probably on this trend line. Okay, and specifically the Brexit level of 110.31 is the high volume level. Talked about the high volume levels in Aussie yesterday, right? This was a chart that I showed you yesterday. This is in last night's update. Right? June NFP, high volume level, support, 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 Brexit, support, support. Okay, so you get that. Here's euro. Okay, here's the high volume level from last Thursday night or Friday morning, depending on where you were. And as you can see, we actually found support there, I guess yesterday. But yeah, I continue to look at that level as a support, especially now because now you have a trend line up here too. Okay, so again, that sets up kind of your next move, in my opinion. Basically looking for, and this is kind of now or never if it's going to get into this region. It could happen during this webinar for all I know, but sets up your next plan of attack, which is basically to buy some weakness into this region here. Okay, and then look for continuation towards the bigger resistance zone of 1230, 1240. And again, if we just kind of take a look at inflection points in the marketplace, I mean, it's been pretty clear that you do have good resistance or inflection points, if you will, that 1215, 1240 region. So, there's a lot of stuff there as far as finding, as far as finding resistance up here to take it lower. So that, then I guess brings us back to where might we get an eventual support. Go into a little longer term picture. Copper, very steady. Here's that weekly chart, right? So again, you'd get a 1618 relationship at 105.90. And that would be probably a place to turn bullish. So Leon, that was kind of a long answer. Leon's question, everyone, was what would convince you to abandon your bearish dollar view? Well, again, it's not really about the view. It's not like I'm married to the dollar going up, and if it goes down, then I'm dead. Like, I'm looking to sell the euro actually, right? At 112.20, 112.40. But then I know where there would be massive support for the euro / resistance for the dollar, and that looks like it'd be about 106. At the same time, I think Aussie can go higher now, right? As noted in last night's update. So it's not necessarily about the view. It's about the levels, right? The trading levels. So that is the euro view, is that we have the opportunity to trade both sides. Okay, and those sides being 112, 2040, and 106. Another thing that I think is worth kind of paying attention to, and because this speaks to what this is okay, so this is the euro dollar daily chart with SSI on it, historical SSI, and when it's negative, people are short, SSI is short, and that tends to be a pretty good filter for actually being long. And when it's positive, people are long, so it's a good filter for being short. The interesting thing to me is that despite this drop from 114.30 all the way down to 109, almost 109, retail never flipped. right? Like there's such a bias to the short side for euro. And as I wrote in that thing, that piece, the special report, a while, I think it was like June 6th or 5th or 6th. There's such a bias to be short the euro that it's like inconceivable to everyone that the price action from the March 2015 low could be anything other than consolidation before this thing absolutely falls apart, right? So it's just, it's an interesting study in the psychology of the market of euro. Um, peeps are so obsessed with being, short the euro, okay, that they won't even really kind of give the other side a look, it seems. So yeah, all that said, above 112, starting to think on the downside for euro, and then would maybe be on the lookout for 106. Hold on here, for 106 support. So yeah, that is that. All right, moving on. What about the dollar? Look at that dollar chart. Okay, so US dollar. Again, the 618 level. I put this chart in Monday's update, but 12.065, 61.8 of the decline from the January 2016 high. Big spot. Really, the last level that I think you probably have on this chart would be the year open. But yeah, those are the levels to pay attention to. Yeah, Kelly, it's been, I've talked about this in recent webinars, but I mean, how funny is this? Like, you go through or trade long enough and you'll see kind of everything, I guess. But, I started trading FX like right here. Okay. Middle 2004. And, for the most part, you had pretty good, consistent volatility, consistent swings in euro, right? As you can see here, 52-week range for the most part, was I guess what you describe as normal. Volatility got low and you get a pickup. Volatility got high and you'd slow down. That all changed with the financial crisis, obviously. When financial crisis was here, and things went nuts, and then things got really slow. Things got really slow, slower than they've ever been in the history of the currency markets following the financial crisis. Then you had this trend that no one had ever seen before in the euro, right? Not even back here in the early 2000s. And now we're back to super slow levels again. So it's been very much Jekyll and Hyde. What I am excited about and what, when I look at this chart and what makes me kind of want to do a dance and jump for joy is the fact that I know that this market, the euro, is so coiled and with so much energy in it that another big move is coming. Obviously, I don't know which direction it's going to be, right? With all the analysis I've done, I'm thinking that it is eventually higher, but again, you could go down towards the bottom of the range first, right? We didn't hold that support line, obviously, after the, what happened last week. So at this point, you can go back down towards the bottom of the range. And if we do, then, in a perfect world, we end up catching shorts up here, taking it lower down to the bottom of the range. And then, if we have enough confidence in doing this, end up turning bullish down here and taking it, for a huge ride. But yeah. Thinking on the euro right there. Okay, so let's move on. Kind of spending a lot of time here on the euro. Pound dollar. Well, even after all the insanity that we had, I think that you get a chance to, I don't know when it happens. Oh, Eileen saying, sorry, I didn't really describe that well. You're right. The trend count bars. So all this is, so I can have this in in 3 different settings. Okay. And all this does, so this is a weekly chart. So I have it set to 52 because I'm going to count 52 weeks. And if it's at a 1 period, it means how long the market's gone up without making a 52-week low on a closing basis. Okay. In that context, the dollar rally that we had since 2011 is the second longest in history, behind only the 1985 one, which collapsed. Okay, if I go to -1, it tells me how long the market's gone down without making a 52-week high. Okay, in that case, the longest decline you had was into this in 2005. Now, if I have it set on 2, that tells me how long the market's gone sideways without making either a 52-week high or low. When that happens on a very long period of time, it means that you've basically been in a range for a long time, right? And really long-term ranges give way to really long-term trending moves. Okay, well, in this case, you actually have one of the longest recently. This is dollar index, and again, closing prices. We had the longest period of range since the breakout in 2014. It led to a strong trend. So far in this case, you had a breakdown, which has, to this point, it's led to a fake out. You have not had a strong trend, okay? So that's all that is. Leon asks, no, I program these myself. I do it myself. Let's see here. Where were we? Pound dollar. Okay, so pound dollar, eventually you might, where was I? Here we go. Get a chance at 128, 129, right? And I like to draw these so that you can go along with me. Essentially, what this could be is just like the longest channel support ever, right? So that didn't hold, right? It's actually in resistance now, potentially. But if you go from the 1985 low, it's right down here, a little below 129. Obviously, you got to give stuff like this some room. And then what's interesting is if you draw this, let's see here. No, what am I doing? Not that one. It is, oh yeah, okay, here we go. So inflection point, you know, here, here, you know, maybe we get down into 129 at some point. And the seasonals for pound dollar they get pretty bullish actually after this week, as you can see. So that's the thing. Hossein asking if dollar goes down, will pound still go to 129? Yeah, that's the thing, Hossein. So again, I have this dollar, story that I'm trying to preach, I guess. But each chart, you got to look at it, my friend, on its own merits. Okay, so my working assumption at this point is that euro is a good trade between 112, 2040, and 106. Pound dollar, I don't know if it gets to 129. It probably does at some point, but maybe that's in a month. Maybe it's in a week. I don't know. If it does, I probably want to buy it there. You know, you could spend a lot of time trading here and then go there later. Aussie dollar, I'm bullish now. dollar yen, to be quite honest, don't have a clue, because I thought it had bottomed at 103 and change, and then it went berserk. So that's the thing. So yeah, don't make an assumption where a market's going to go based on a chart that's related to it, because you just don't know. Okay, the whole point is finding opportunistic chances to do something. And if pound dollar goes to 128 or 129, it's probably an opportunistic chance to buy it. Okay, now moving on to a short-term picture. I tweeted this chart out just now. So here's a pound dollar chart. The rally actually is, as you can see, it's like a perfect channel. And horizontal levels, okay, 2 equal legs from the low is actually 135.75, which lo and behold is the exact same level as post-Brexit, right? Now I look at these from the standpoint of the futures and the volume. So in this case, I know that that's there because, again, here it is, right? It's the volume level that was, again, during Thursday night in the US. And there it is right there. So what I'm looking at is basically I want to sell into that. Okay. I want to sell into that. Maybe we get there tonight. I don't know. Near term, watch for support, probably just on the channel, right? Could be all the way down here near 133.70. Week open is a little higher, 34.13. But as you can see, this gives you basically, you're working with a short-term channel, but it's, it's a lot of movement there because the market's, the range is so expanded right now. So, be picky, okay? 35.70s for resistance. Bottom of the channel would be support, probably near 33.70. As you can see, you've got some inflection points there. Okay. Okay, sorry. So that's cable. Those are basically the two levels I trade for the rest of the week. 33.70 and 35.75 or so. Moving on to Aussie. We'll get to Aussie in a little bit because there's more crosses I want to talk about with Aussie. Kiwi. If I just get rid of what makes me a human, get rid of my my biases or something, and just tell myself to just trade the damn lines on the chart, I think I would do all right or better. But check this out. So remember this channel. This was the old channel. Not that one, this one. Okay. That was the old channel. As you can see, it's really been offering some solid opportunities. Pointed some of this stuff out, I guess, but haven't really taken full advantage of it. So, look, I feel like the opportunity on Kiwi is on the downside. Okay. And that's because of this chart. Oops, it's because of this chart right here, right? The monthly chart, which has this massive long-term trend line, which, you know, I mean, came off that thing, obviously, you know, because of what happened last week, but we came off that thing substantially. So then when I have something like this, okay, so you hit support there. All right, fine. We had the, you know, idea here was basically you had the long-term chart. You wanted to find a way to be bearish. So we go into the weekly opening price. It's 70.63. I had 70.50s over here. We went through it. So it didn't work out. But maybe this is resistance up here. Okay, the median line, which actually was resistance on the post Brexit bounce. Okay, and you know, if this is an A, B, C, then we have this to go with. And that puts us at 71.71, two equal legs up, right? So there we go. That could be something to think about as far as a short position for Kiwi, 71.71. All right, and then the area I'd be looking towards probably just be the year opening price, probably maybe a little above it, maybe 69, right? Basically former resistance. So, you know, that could be how Kiwi gets down into that region. Obviously, you have the possibility of a, you know, a head and shoulders. The target would be actually a lot lower, but getting ahead of ourselves on that. There's Kiwi. So 71.71 looks like a really nice spot to potentially be on the short side. 71.66 to 618. Dollar CAD just kind of pinned up here in resistance, isn't it? I'm not too sure what the deal is with dollar CAD. Seasonality is actually pretty bullish for dollar CAD, even though general dollar seasonality is bearish. But that's dollar index, which actually the Canadian dollar is not really a big part of that index. So, you know, for CAD, I kind of lean, I guess, towards buying weakness. But the pattern here, there are a few things. The pattern, for one, you know, we could end up riding through this, just go like, you know, through these two levels. The consolidation now is going on. Well, we're in the second month of it. And consolidation, I'm thinking this, you know, has been going on, but it's getting a little late for that because the intersection would have been like today. So that's not happening. You could be in a triangle. If we stay within this triangle, like maybe A, and then we go triangle B and go sideways for a little longer, it could end up getting us up to 138 much later in the year. But near term, any sort of trading in dollar CAD, I think, should probably be done on this slope. And that's simply a trend line from the May low and the June low. And as you can see, the parallels that extend off then, this is the, you know, the shift method, just a trend line. And what you're doing is, you know, noticing that the market has actually responded to this mid 50 line right here, right? And so essentially looking for that to be support again. You know, when on Wednesdays, when you have crude oil inventories, I'm looking for, you know, dollar CAD to come into levels, right? And trade into levels, you know, after inventories. Because a lot of times that's what happens with crude oil inventories. You get dollar CAD will knee jerk one way or the other, and you might get, you know, a retrace off of it or whatever. In this case, it didn't really do anything today. I mean, crude oil, you know, went pretty hard up. kind of stuck in a 40 pip range here in dollar CAD. But yeah, this is the level I'd watch at, is 29, about 29.26 or so. Okay, followed by the support down here, which is 27.70s, maybe a little higher, considering it's upward sloping. And then thing with dollar CAD is you continue to be capped by 130, 120, 130.90. And Kelly right here says, would you think of shorting dollar CAD? Yes, I would. But again, I would want to do it on, a pop. Show you the daily. I would want to do it so everyone, I think, at this point knows what I mean when I talk about daily reversal, support, and resistance levels. In these kinds of markets where there's essentially no trend at all, and things are just extremely chopped, these are the kind of the markets that this stuff works best in. Okay, so the low for the move, the close of that bar. Okay, the high for the move, the close of that bar. You've got the month open here at 130.90. Okay, so yes, I would, Kelly, I would look at a short position if you had, again, you want to see resistance into say 30.75 to 30.90. Okay, and then to take it down, probably to 27.70, maybe 28.55, maybe 29.26. You're in a range. So until you break out of it, if you really want to trade dollar CAD, then yeah, the best thing to do is is sell those spikes into resistance and buy the dips into support. So I think this is a triangle. You've got 3 waves up, 3 waves down, 3 waves up, might get another 3 waves down, 3 waves, so on and so forth, until you break out one way or the other. So even, if this market's going to break down, you still probably have a couple more legs in the triangle because so far there's just 3, right? And this is the thing too with Elliott that people sometimes don't like, but it's just how things work. Okay, so there's a couple ways to count this. All right, here's the bearish case. Okay, where we're going to head lower in D, higher in E, and then we're going to spill, in a big decline. Well, there's a bullish case too, and that would be this. That's A, B, C, D, E, where you're going to go sideways for even longer, and then you're going to go higher because that'll be B and that'll be C, right? We don't know which one it is. At this point, both of these both counts suggest that you're at least going a little bit lower, right? Towards, again, bottom of the range. Somewhere over here. So, and I should say too, that probably is, reinforced by the crude oil outlook. So we held this thing, and oh, by the way, those S&P charts, yeah, we opened well above what would be considered resistance on the red line. This is not an impulse anymore, okay? It can't be. You have overlap, right? I mean, it's just not. So this is left as a 3-wave decline. I go back to the comments from long-term charts basically saying on the S&P 500 that it seems looking at charts below the monthly time frame is a good way to lose money. Okay. That doesn't, the trading process underway since May 2015 is a top. All right. You know, again, maybe we get to 2200 before this is all said and done. You know, can't you just see like the market, okay, Brexit happens. We take out the highs. Everyone is ecstatic. We get to 2200 and the market crashes. Right? I like that story. And again, here's the, you know, you can look, it doesn't matter if we look at SPY or SPX 500, doesn't matter. The median line that goes all the way back to 2009. Oh, that was ended up being support again, didn't it? Pretty wild stuff. So yeah, I don't know what the near term holds. I do know that once we get up to this level up here, something big's going to happen. And I think it's probably at the top. So we'll see. Anyway, so here's crude oil. Held this, obviously leaves this basically as a potential double bottom, and the target, next target up here near the 50, well, really not far from 56. And what I did, remember we did in the very beginning of the webinar, we looked at, you know, 2 equal legs for the US dollar index all the way from the 2011 low. Well, let's do the same thing right here. So if someone's using a chart and they're like, well, let's see where 2 equal legs comes in. They have 5106 and they're like, that's the top. Well, in dollars, it is 2 equal legs. But again, let's do this now. Let's do this in percentage terms. All right, so we went from $41.87. We went 41.87 was the top. That was a rally from 26.06. Okay, that's a 61% rally. What's a 61% rally from 35.22? Okay, we're gonna 35.22 is 56.59. So again, plus 60%, plus 61%, plus 61% actually puts you all the way up here, which happens to actually be the May 2015 low. And seasonality for crude oil, and I've actually got to, I have these, to manually do this because I have to import the long-term crude oil levels because my data on here does not go back that far. Seasonality for crude actually peaks in the very middle of July. Okay. You can see here, you start to turn down, you know, basically August going through November is the seasonally weak period for crude oil. So maybe we can work up into that big zone that we just talked about for crude, okay, before we turn down again. Okay, I said I wanted to look at some other Aussie charts, and I'm going to do that. So we have obviously Aussie dollar, not much new to look at as far as, you know, last night, right? Because that's all on last night's stuff, but I would like to look at Euro Aussie, Aussie Swiss, and Aussie Kiwi. So, okay, here's Euro Aussie. I think it goes to 146. Again, that's the long-term trend line. If it breaks that, it's going a lot lower. Eventually, this could end up being a descending triangle that breaks lower. The key is trying to stay in the trade. We got a good entry, had a good look and run, and then, these markets just there's not much flow or trend. So here we are, kind of rallying midday. So if this gets stopped out break even, so be it. I have no control over that, and maybe would try to short it again if it went to a higher level. But here's the 240-minute chart. I'm basically following a couple slopes on this one. This one here, okay, as you can see, we actually just came off the midline. So if this is lower, we kind of need to turn over pretty soon. And then, accelerate down through the median line. Another chart that's interesting is Aussie Swiss. Again, this is basically like Euro Aussie short, but it's Aussie Swiss long. So you've got this channel, tried to break through it several times this year. Looked like we had done so here, ended up being a false move or a fake out, and here we are, kind of bouncing off of slopes. This, basically everything from 2015 onward could be quite the bottoming process. Okay, quite a big head and shoulders bottom. So, just more fuel on the fire, if you will, for a potential Aussie Swiss move. Testing the year open right now, so just like Euro Aussie is, of course. So, if we can break up through here via positive, might try to scope out an entry in that case. Aussie Kiwi had noted this morning on Twitter, you might actually end up with, again, scrolling out, right? Long-term support. You have the 786 of the entire rally at 103.20. Going to the 4-hour chart, it does look like price action from basically, what is that, the 9th or 10th of June is a triangle. It's going to try to break lower, in which case you would have two targets. I measure the targets as the 618, 1618, and 200% extensions of the triangle, and that gets you 103.20, which is 76, and finally 102.70. So you might end up getting a final low for this move down on this 50 line in one of these levels here. Okay, for Aussie Kiwi. I don't know how much data I have for Aussie Kiwi. Let's see. Not enough, but yeah. So might be the final low down here for Aussie Kiwi. All right. Either way, watch the structure. And that is pretty much it. I don't have really much else to discuss. For today. Euro pound, Masanori asking. Sure, let's check it out. There were a lot of people right after the Brexit vote, including Citibank, Citi, and a couple people that I know that were real excited to sell this. And he said it's really bad for euro and pound, whatever. Well, they've gotten kind of blown out on that. Look, I don't have anything on the downtrend here. I mean, this is broken out, okay? But if we go to the daily chart, you can see daily chart, you're working with this, and you actually have hit uptrend resistance. So I can see euro pound trading lower from here. Okay, get rid of these. It's nice that people wanted to sell it right away and they got stopped out. You still have this gap, obviously open. So 81 would actually be a level to watch for support now. All right. And yeah, Musner, you said 77. That would probably be around this lower parallel. I don't know if you get back there or not. The immediate take on this, though, is that you are at resistance, but it's uptrend resistance, right? So it's dangerous to sell this because even if you go lower, you could still kind of poke up above here and test these levels more. It'd be a short setup for me would be something where like the market would go to a new high and then reverse. You get a daily reversal, particularly a J spike where the volatility is such that it's big enough in order to to get short. And I just want to see where the Fibos come in. You have retraced half of the decline from January 29. So this is something to watch, I think, or to keep around. Yeah, this is a place to top. In gold, sure thing. The gold picture is kind of complicated because you have, well, the COT, you have a record position for shorts. But what I'd be watching for here in gold, so essentially you see this slope here, median line is the low, 50 line was the low on Brexit, and basically you've got kind of this stuff here, consolidation around. I would watch this line for support, and it's basically 1300. Okay, so it's pretty much 1300. 1300 would be an area where you could find a low before you go to new highs in gold. Now, new highs in gold, I don't know that new highs in gold actually get a strong advance off that because you have the trend line here all the way from the 2012, 2011 highs. So you could get a lot more sideways trading between 1300 and the trend line. In other words, take out the highs, come back to support, et cetera, okay, in order to wash out some of this record speculative long position. But the levels that I would trade are 1300 for support, okay, on this line here. There. Okay, on this line here, 1300. Is there anything else? Okay. This is another one that's interesting, kind of a non, dollar pair, but Aussie CAD is in a nice slope up here. Okay, so watch for any dips in Aussie CAD. To me are a buy, at least towards the trend line. Dollar Swiss, looking for a top, actually. It might be closer to 98.60. Following this, it's essentially the trend line, but it actually is derived from slope. So you could have a flat pattern here, grinding into a top. Would watch for 98.60 for dollar Swiss. What else? Aussie Yen. So Aussie Yen, this is actually an interesting one. So we have the channel, right? This huge level. This was one of the charts that was put in earlier in the week. Go down to the short-term chart, and this is a way to get an entry off of something that's, extremely, near term. It's very, extremely volatile, right? So I'd look for support, just really simple stuff here at 75.23, which is the weekly opening price. Okay. If you get back to there, that's level for support. Also, might have a fib there. And you just about do. 75.30 is the 618. So 75.23.30, that's your potential support for Aussie Swiss. It's going to be really hard to get a trend line off of something like this because you're drawing off of, kind of crash, kind of crash lows. Well, it seems to offer a pretty tight channel, but 75.30 week open, watch for support. Resistance is this longer term median line, which actually lines up with the former lows. So $78.20. Okay. So Aussie Yen probably going back up here before it faces a real test of resistance. Okay. And that is, I think, about it. Best thing we can hope for, I guess, at this point, is that all this crap out of the way with this Brexit stuff is that the market starts to expand a little bit, right? Like, it's one thing to have, you say expand. What do you mean? We've had crazy volatility. Yeah, it's like for a day, right? I'm talking about is, a good market where the market's, you get good flow, you get good trend. And, I would not be surprised if that were to happen over the next few months, because after you get a big shocker like this, market kind of goes back to repricing itself, and then will, find its path, right? You think about what happened, say, in May in 2014, right? What was really the trend really got going in 2014, the dollar bull trend really got going in like August, September. But what was the big event that happened before that? Well, it was in May, and it was Draghi and talking about the QE and all that crap, right? And the euro fell sharply, and then you kind of went into a little consolidation phase, right? Volatility contracted again. Well, same thing here. Okay, we've got this big move up in the dollar, big move down in the pound, more or less big move down in the pound. Everything else kind of coming back. And, markets get quiet again potentially before you get really a reset, and then the market can go where it's going to go. Maybe that's dollar down. I don't know. Either way, I really like the levels that we've got in some of these markets to trade. 12.30, 40 in euro, 106 maybe in euro. So we're looking forward to it. It should be hopefully a good summer or rest of the summer. It's almost July already. as we move on into 2016. All right, so everyone, thanks for attending. Oh, thanks, Eileen. Yeah, have a great rest of your week too. So yeah, let me get this up and archived so you guys can watch it. If you're later, you just want to review it. Went over some good stuff today, I think, particularly as it pertains to some longer term dollar stuff. And just a way to think, right? Just because I write these things about like being, I think that the dollar's putting in this big bottoming process, or sorry, topping process, excuse me, and the euro's putting in this big bottoming process. That doesn't mean that like you're going to be long the euro and you're just going to hold it forever. If there's a chance to be short the euro at 112.20, 112.40, up at after we broke support and that becomes new resistance, then hell yeah, you got to do it. Okay. So the analysis is just that. The trade setups are that too. Look, I'd love it if the trade setup came into 106 and then we could align with the analysis and we were starting to prove correct on that. That would be great, right? But it doesn't always work like that. So stay nimble and take the new information in as it comes. Okay? All right. Take care. Bye.